Well, hello and welcome to Women of Color, Money and Legacy, where I talk money matters. I share strategies to empower us to become financially literate in terms of managing our money wisely, making important financial decisions, building generational wealth, and creating a lasting legacy. It's a journey of learning and growing together. This week, I want to talk to you about credit reporting, building new or rebuilding less than perfect credit. Now, this is part one of two parts. Today, I'll do an overview of credit, explain the credit reporting system, credit repair, increasing and maintaining a good to excellent credit score, and finally, how you should approach collection accounts. Now, next week, I will share some options, including specific credit cards that will improve your credit score, whether you have no credit and you're building from scratch, or your credit is less than perfect and you're rebuilding your credit. Now, this is for people who are serious about getting and maintaining at least a good credit score, if not perfect, which is the ideal goal. And I definitely believe you are, you wouldn't be listening. Now, building good credit takes time. You will have to commit to good spending habits and exercise discipline over the long term in order to get there and to maintain a good credit score. Now, there are some steps that will help improve your score rather quickly, but don't expect to go from 400 to 750 in a year's time. Now, I know that there are people out there who claim that they can boost your credit score from 200 to 300 points in 30 to 60 days. Now, that's just not my experience. Now, fortunately, I have an excellent credit score over 800, but I haven't always. It took some years to get my credit score over 800 after my bankruptcy was discharged. The Chapter 7 bankruptcy stayed on my credit report for 10 years before it dropped off. Now, up until that point, my score never got over 740, even though I wasn't carrying any debt. But as soon as that bankruptcy dropped off of my report, my score immediately jumped 50 points and broke 800 shortly thereafter. Now, it's easy for me now to maintain excellent credit score because I don't carry balances over from month to month on credit cards. I don't charge more than I can pay in full when the bill comes due. I like being debt-free. And this is a practice that I encourage anyone to embrace, okay? Now, let's get into the meat of the discussion. Credit scores are used to predict how likely a person is to miss a payment in the future. And having good credit is important because it helps you to get the things you need, like a car loan or a mortgage or approved for credit cards. Some of the benefits of having good credit are more housing options, lower loan rates, better insurance options and rates, lower credit card interest, higher credit limits, better employment opportunities, believe it or not. It's easier to get utility service, to make purchases without a security deposit, and choices of better payment periods. Now, when you apply for a loan, credit card, or rent an apartment, companies will look at your credit history as an indication of how you've managed your debt in the past. They will use your credit history to predict your future financial behavior. Your credit score is a 3-digit number intended to represent the likelihood that you will pay your bills on time. And the two credit scoring models used in the United States to generate credit scores are FICO and Vantage Point. And the FICO scoring model was introduced in 1989, and the Vantage score model wasn't introduced until 2006. Now, while the Vantage score was developed to be more consumer friendly of the two, FICO is generally used as the official barometer for credit worthiness. In fact, 90% of lenders use the FICO scoring system. Now, take a look at these two models in comparison. At the top is the FICO model, and the bottom is the Vantage score model. As you can see, a FICO score less than 580 is a poor credit rating. A score from 580 to 669 is a fair credit rating. A score of 670 to 739 is a good credit rating. A score of 740 to 799 is a very good credit rating, and a score of 800 and above is an exceptional credit rating. And below you see Vantage score, and there is some variation in the ratings. It has a very poor score rating from 300 to 499, and from 500 to 600 is poor credit rating. 601 to 660 is a fair credit rating. 661 to 780 is a good credit rating, and 781 to 850 is an excellent rating. Now, since FICO is the most widely used of the two credit rating systems, we're going to use it as our barometer. And your goal is to get and maintain a FICO score of 740 and above. Now let me give you a sequence of steps to repair and rebuild your credit to get it to that range. And these are the 3 steps I recommend you take to get this process started, because first you need to clean up your credit report. And first you want to get a free copy of your credit report. Now every 12 months you'll be allowed to get a free copy of your credit report from all 3 credit bureaus: Equifax, Experian, and TransUnion. Just go to the website annualcreditreport.com to request a free copy. Next, you want to review each report thoroughly. Look at any disputable entries such as late payments that you can prove that you made on time, inaccurate charge-offs, or accounts that you don't even recognize. You want to make sure the reporting is accurate and free of any fraudulent activity. And third, you want to dispute any inaccurate activity. It doesn't cost anything to file a dispute should you discover any inaccurate, unfair, or unsubstantiated items on your credit report. Now you can file a dispute online, but I recommend sending it by certified mail so that it is handled by a person who can research the issue. Filing online might just generate some automatic decline response, okay? Removing negative activity from your credit report will improve your credit score. Now let's get into collection accounts specifically. Collection accounts are automatically deleted from your credit report 7 years from the original delinquent date of the original account. Let's say you had a Macy's account that became delinquent on December 1st, 2021. And Macy's sold that account to a collection agency on May 1st of 2022. Now the 7-year delinquent date would begin on December 1st, 2021, not May 1st, 2022. And what you may not know is that paying off a collection account will not improve your credit score. Now, the older the information is, the less impact it should have on your credit. It might look better for lenders to see paid in full or settled, but that's about it. Paying off the account is not going to improve your score. Now, rather than just paying the collection account, you want to submit a dispute by certified mail to the credit bureaus requesting that the collection agency verify the debt. You'll want to file the dispute within 30 days of receiving the collection notice. Now, collection agencies are legally allowed to tack on additional interest and fees to the original balance, but they can't overcharge you, not beyond what the FDCPA allows. And FDCPA stands for Fair Debt Collection Practices Action. Its guidelines include how much they are allowed to charge, a percentage of the debt balance, the time frame, or the statute of limitation to collect the debt, or any other stipulations. So you'll want to do a Google search on FDCPA and familiarize yourself with its collection guidelines. If what the agency is not in line with the guidelines, you can request to have the debt invalidated and deleted from your credit file. And this is to protect you from becoming a victim of the collection agency. And here are 5 practices that collectors are prohibited from doing under the FDCPA. And there are more, but I just want to give you these 5. You really want to familiarize yourself with the entire document. Number 1, debt collectors, they cannot swear or use offensive language when trying to collect the debt. They cannot threaten to illegally harm you or your property. They cannot threaten you with illegal actions. They cannot falsely threaten you with actions they do not intend to take. And they cannot make repeated phone calls over a short period to harass you. Now, you can contact the FDCPA and report the collection agency if you feel that they have violated these guidelines. If the collection agency does take legal actions within the guidelines and you legitimately owe the debt, then you should offer to pay an amount that you can afford to pay in full within 30 days. Don't promise to pay more than you know that you can come up with. If the debt is $1,500, make an offer between 25 and 50% of the balance and have them agree to delete the account from your credit file once the debt has been paid. Another thing to know about collection accounts, if you're making monthly payments already, you don't get a monthly statement from collection agencies. Now, you might think that the balance is being reduced substantially because you're paying on a regular basis, only to learn that you've mostly been paying interest and not principal. So make sure you're monitoring your credit report on a monthly basis. And you can sign up with Credit Karma. It's free. The website is creditkarma.com. So just to review this section on collection accounts, remember, paying off collection accounts will not improve your credit score. The accounts will naturally fall off after 7 years. And don't just pay, send a dispute to the credit bureaus requesting verification of the debt. 4, if they violate the guidelines, request that the debt be invalidated and deleted from your credit report. And if you must pay, offer to settle at a fraction of the amount owed. Now, I'm not acting as your credit advisor here. This is for educational purposes. Now, I'm going to wrap up for today by just sharing a few simple tips on how to reap the benefits of maintaining excellent credit. Now, tip number 1, you want to always pay your bills on time. The best way to make sure that your payments are made on time is to set up automatic payments. Practically all of my bills are set up as a direct debit from my bank account 5 days before the due date. Now, don't make the mistake that I made once in setting up my automatic payments using my bank debit card, because bank cards do expire. I learned that the hard way when my insurance expired unknowingly and I had to have it reinstated. So don't make that mistake. Use your bank account, not your debit card. And tip number 2, stay under your credit limit. It's a good practice to keep your credit usage below 30% of your available credit. If you have 3 credit accounts with an aggregate credit limit of $3,000, you don't want to be charging in excess of $900 over all of these accounts. Of course, I always advocate paying your balances in full each month whenever possible. If you do carry a balance, try making your payment earlier to save on the interest being accrued. Tip number 3, don't apply for multiple cards or loans over a short period. It doesn't look good to lenders. They may think that your financial situation has changed for the worst. Only apply for credit when you need it. And I'll talk about that some more next week. And tip number 4, as I've already stated, check your credit reports. Reporting errors can hurt your credit scores, so make sure you keep an eye out. Sign up for Credit Karma and monitor your credit monthly. And get a copy of a free credit report at annualcreditreport.com. And I have a link of the resources I shared today in the description box below. And that's going to wrap up part 1 for today. Next week, I'll share part 2. I want to take my time with that by giving you specific cards and options you can use to build or rebuild your credit. Thank you for staying until the end. Again, if you enjoyed the video, please like, share, comment, and subscribe. Click that notification bell to receive an alert each time I upload a new video. Take care, and I'll talk to you soon.